All right, end of the week. It's April 20th, and that day rings a bell because April 24th, because 20 years ago, April 24th, 2000, I started not in the business, I started trading electronically. First day at a prop firm. Guy sat me down, showed me what was what. Remember, he knew I had floor experience, and he said, if you see something, trade it. It was like a 5-minute intro to how to understand the functionality of a front end. But that aside, within a couple weeks, I had an epiphany. I had this moment where I could remember like it was yesterday, and I was looking at a chart. Here's what I want to share with you. I was looking at a chart, and it was of a rally. It wasn't a line chart, but let's just say it was. It was of a rally. It was a price going from there to there. And I thought to myself and asked the question, what does that mean? What happens in that rally, first of all, to make it go back down? Right? That's what the first question was. What makes the rally stop? And I thought to myself, well, in order for price to go up from one point to another point, there has to be more buyers that came in, right? More buyers that bought it and wanted to buy it. That would be the case for the rallying price of anything. There has to be more buyers. So if there was indeed more buying and buyers, I was able to then think, then there's probably more people who opened up maybe a long position. And that's why at some point it has to go back down, because people who are long are now sellers to get out of that position. And it doesn't mean I just became and only faded the rest of my life, but it did mean understanding why a chart would move and why it would go up but then back down, why there would be such a thing called a retracement or a pullback, because a rally has a lot of buyers. That makes sense, which means maybe there's a lot of longs, and which means longs turn into sellers, and it's the sellers that say, hey, I got to get out of that long position. Maybe they bought it there, maybe they bought it there, maybe the dumb, you know what, they bought, not dumb, but they got stuck at the top and they bought it there, and their eyes get really big, and they longs have to puke, or longs have to now chase it down. And that was just like I said, I can remember like it was yesterday. And it was within the first couple of weeks of trading in a prop environment, because I was looking at charts more than you would look at charts on the trading floor. Nobody printed out charts and held charts in front of them in a pit, but there were terminals around the floor. You'd pull up a chart and things like that. But now trading electronically, you at least had two monitors. Now we have a lot more, but two monitors. One monitor would have your price ladders on it, which were order books back in the day, and the other monitor would have charts on it. And you'd have as many charts as you wanted. And you generally shared a couple screens with the trader next to you. So for your second monitor, your charting monitor, your first one, obviously, that was just exclusive for you, because those were your trading books. Now they're called domes. They were never called domes back in the day. They were called front ends. But that's what they were. And I think if you go to my website, edgetradinggroup.com, and you're not logged in, on the About page, scroll down and you'll see a video when I used to record myself to review. And that was back in 2001. And you'd see what the price books or order books look like versus today. So anyways, looking at a chart more, I had that moment of understanding why price, first of all, goes up, and then why it would go down. And let me say that again. Not why price would go up, but why price would go down was the first progression of my thought. And I just explained it, right? Now it made me think, well, what makes price go up? I know what happens when price goes up. There must have been more buyers, but what makes price go up? Well, maybe for just the flip side, what made it go down? Sellers and more sellers, and maybe shorts, and maybe shorts stuck in the hole, and maybe people who want to get long, and maybe both. But either way, more buyers that were created in the move lower. How do you create more buyers in a move lower? People who getting short, they're buyers, right? Most people don't learn it like that, but they are. What else creates a lot of potential buying in the future on the move lower. People who miss it and they're chasing it back up. So it's shorts who need to buy it, and it's people who want to get long, but they're too fearful and they might chase it and reach. How many people listening to this reach, chase, miss? They want to get long after it bounces. They want to get long up here, but they didn't have the idea down there. So they want to get long up here or up here, and the market does this and then that and then rallies. So you were right, but your location was bad. You reached. And you were one of the reasons why it actually rallied instead of taking advantage of the rally. Let me say that again. You were one of the reasons why it rallied instead of taking advantage of the rally. You were reaching, you were climbing over each other because you missed a better location to get long, and you were one of the reasons why it was rallying. The other dynamic is shorts that are at some point too short, and now they're even more of the aggressive emotional dynamic of buying because they have to buy it. When you want to get long, you may or may not want to buy it. You could change your mind. But when you're short, you have to buy it. Just think of anybody in this listening to this video. When you're short, most people put bracket orders in. I don't, but a lot of people do. What are bracket orders? I think most people know what they are. When you open up a short position, you put in two orders. You put in a buy below and a buy stop above. So it's pretty clear that when you're short, you're now a buyer. Just look at your bracket orders that go in after you open up a short position. You're a buyer for a loser. You're a buyer. When you're short, you're buying it for a winner down here or a loser up there if the price is right there. If you're short from this line, you're a winner if it goes down there. It's a limit buy order or it's a buy stop for a loser when you open up a short and you put bracket orders in. So it's clear you're a buyer when you're short. What happens when the price goes down and triggers your sell stop? No, I'm sorry. What happens when price goes down and fills your order here? This one gets canceled. What happens when your short goes against you and it triggers your buy stop? This limit buy order down here gets canceled. Gone. But that's a webinar for another day. I just wanted to go over a real moment of clarity, a light bulb moment, an aha moment, whatever you want to call it, of what's really important, just the basic simplicity of why did that price rally, but why did it go lower? And that's the way I thought of it first. Not why did it go higher, but why did it pull back? Why did it stop going higher? I guess the best way to say it. Why did it stop going higher and then pull back? And, rewind this and play it again. But that was not exactly 20 years ago. I started exactly 20 years ago, April 24th, 2000, trading in a prop firm. I was like about the 20th guy hired at that time. There was some great guys hired after me. There were some great traders in before me. There were some guys I was a lot better than. There was guys better than me. There was guys that were about the same as me. It was that combination of a real venue of professional day traders, and that banter and that review and those lunch, sitting around just having a sandwich and just that conversation is what gets you and keeps you in a position to pull money out of the market or get consistent and get confident. It's a missing piece in trading today. You got to find a way to fill that void without going out and trying to get hired by a prop firm. That's not realistic. But what is realistic and possible is to be around good, like-minded people that have conversations, and you'll have better moments. And it doesn't always happen in 5 or 10 or 20 videos. It could happen in a good conversation with a like-minded trader when you're just BSing about yesterday's Gilead news or whatever, but it's about having those conversations. That's why the prop firm brought lunch in every day, had a kitchen, and lunch was brought in, and eventually breakfast and lunch. He wanted people to get there early and stay a little later, but he wanted to keep people around each other. So those were moments in the venue of real professional traders. That's an elusive venue today, meaning people don't even realize that venue, what it is. Like I always say that if you want to be a professional NFL football player, you know where to kind of find professional football players or professional baseball players. You know the venue, right? Baseball stadium. You know what they look like. Maybe you can get in the locker room and see what they talk like and act like. You know what they're. But professional traders, you do an internet search or a YouTube search, you don't know what you're going to get. There's probably 10 or 20% of good stuff online, and the rest is like anything else, not that great. But I don't want to disparage anybody else in the business. I think there's a lot of people who try, and that's probably the figure of some helpful stuff. Just always the epiphany moments, the light bulb moments of why something were to happen. And that was literally the progression that happened about 2 weeks into my electronic trading career. And if it wasn't for electronic trading and the transition from the pit to the PC in the late 90s, I wouldn't be here talking because I would probably be back doing electrical work. I was ready to call it quits as a trading floor pit trader. And then when I heard about this venue, heck, I was a pit trader and really didn't understand that this venue of prop trading existed. So why the heck would anybody else know it nowadays, understand what that venue was like and what was learned and what the meetings were about, whether they were impromptu meetings or meetings you had with another trader, desk to desk banter were invaluable educational moments, getting you out of a hole, getting you out of a trading rut, keeping you in a good, keeping you confident when you're doing the right stuff, getting you off the wrong path ASAP, having a guy, risk manager, tap you on the shoulder and say, hey, you okay? Not yell at you, but just reset you. You weren't able to do many of the mistakes people who enter the business now are able to make. You weren't able to add to losers. You weren't able to lose more than you should have. You weren't able to trade bigger or as big as you wanted to. It had nothing to do, like today, you could trade as big as margins are in your account. That's BS. Nobody should come in this business and trade any bigger than a 1 lot or 2 lot in the micros, maybe. Nobody. But yet people do. People add. It's not that as prop traders, we were just incredibly disciplined people. It's just we weren't allowed to make those mistakes. You weren't allowed to click and trade bigger than you were signed off to trade. You weren't allowed to add to losers and have a huge blowout down day. You weren't allowed to not review your trades and not talk through what you were doing right or wrong. And so that's the difference. And that was my early moments in going from not making any money as a pit trader to making more than my dad. And I was home by 11. It's the story I always tell, because I was still living at home. My dad, after about, not right away, probably about 4 or 5 months, I really started to move. Let me say one more thing about it, as all these memories are coming back. 222 was the day I knew, and it wasn't February 22nd. 222 was probably a month or two into my career in a prop firm. And I'm looking at the board. We had a thing called the God's Eye where you see everybody's ending P&L. And just to check your positions to make you were flat or whatever. 222. I was trading 1 lots, just 1 lots. And this day, a month into this, I knew I'd do it. I made 222 ticks, 222. And it was just 1 lots. And that was roughly $2,220, $2,200 in the Euro stocks, which was a different market than it is today, liquidity wise. But I remember one of like the number 2 guys at the firm happened to be up there at the same time, said it's a hell of a day. And that was the moment I knew that nothing could stop me. 222. Have a safe weekend, guys. See you Monday.